Okay, hello and welcome to our audience members joining us from across the globe. I'm Raymond Karam, the Chief Program and Development Officer here at the Arab Gulf States Institute. We have an exciting program for you today looking at the fast evolving roles of sovereign wealth funds and the Gulf Cooperation Council states, their associated investment activities, and what they tell us about economic development trends within the region, as well as international political economy dynamics. Joining us this morning is Diego López, the founder and managing director of Global SWF, based in New York and Singapore. He is a world-renowned expert on sovereign wealth funds, having acted as a practitioner and advisor for many years. He has worked as a consultant for the World Bank and the UN and supported the establishment of or reformulation of a number of sovereign wealth funds around the world. In the past few years, he has reshaped the sovereign wealth fund industry by establishing several key initiatives, including the Global SWF data platform, the governance, sustainability, and resilience scoreboard for best practices among institutional investors, and the SWF Academy to nurture the future leaders of the world's top sovereign and pension funds. Moderating the session today is my colleague Robert Mogielnicki, Senior Resident Scholar at the Arab Gulf States Institute. He created and leads the Next Gen Gulf series, examining technology trends in the Gulf Arab states and looking east, the China Gulf Initiative. His book, Political Economy of Free Zones in the Gulf Arab States, was published by Palgrave Macmillan in April 2021, and he is currently working on an edited volume examining the political economy of sovereign wealth funds in the Middle East and Asia. And with that, Robert, over to you.
All right, great. Thank you so much, Raymond, and also much appreciation to Diego for lending us your expertise today for the next hour. And Happy New Year for everyone joining us remotely. This is at least my first webinar moderation in the new year. Well, look, as many people know, and a lot of the Middle East watchers we have online here will know very, very well. There's a lot going on in the Middle East region, especially in the Levant, whether it's in Gaza, Syria, Lebanon. But today, we're not going to be looking at those issues. At least for the next hour, we're going to be looking at a different part of the Middle East region, the Gulf. And we're going to be looking at a different topic, moving away from the politics, largely moving away from the politics. I think we'll cover maybe a little bit of politics today, but mostly economics and investments and looking at sovereign wealth funds. Now, what I'd like to do is just quickly set the scene for today's discussion and actually highlight a couple of figures and insights that Diego and his team shared from their most recent annual report, because it does a good job, I think, teeing up today's conversation. And the first thing I'll say is that this is a really large and influential global sector when we're talking about sovereign wealth funds. There are about $13 trillion of assets under management held by global sovereign wealth funds. And if we break down where those assets are held in the different regions that we see sovereign wealth funds playing the largest roles, we see that the GCC states are right at the forefront here, with, according to Diego and his team's research, holding about 38% of those assets under management. The other big players are China with about 20%, Norway with 14%, and then Southeast Asian funds as well, constituting about 10%. So those of you, following sovereign wealth funds, these countries and regions will not come as any surprise. But I think it's worth noting that when we're talking about the important role of sovereign wealth funds globally, the GCC and also Asia really loom very, very large in this conversation, and I expect we'll talk about those regions in addition to the main topic of today, the Gulf, quite a bit. Now, in terms of actual capital deployment, we saw ADIA, ADQ, Mubadala, PIF, and QIA, just a small handful of Gulf sovereign wealth funds, investing about $82 billion over 2024. And Mubadala, Abu Dhabi's Mubadala, led the pack for the year. And Diego and his team highlighted Mubadala as the leading sovereign investor for last year, with about, I think, roughly $30 billion, just under $30 billion in investments. Now, the year before that, the largest sovereign wealth fund investor, that mantle was claimed by the Public Investment Fund. Not the case this year, and that tracks, pretty well with some of the pressures that we're seeing on spending in Saudi Arabia that have emerged over the course of the last year. But the PIF did jump onto our kind of news radar early in the year with the announcement about completing a $7 billion Islamic loan or Murabaha credit facility in early January. So many of us now, I think, as we look ahead at 2025, are thinking about the new macroeconomic, I should say new or different macroeconomic conditions, the geopolitical risks, and other trade and investment dynamics that are we're likely to see. And just a few days ago here in Washington, D.C., before the inauguration, it's really hard not to feel that we're on the cusp of some pretty significant changes here in the U.S., but also in the international system. And like it or not, sovereign wealth fund officials in the GCC are going to have to manage these new developments, seize new opportunities, and also mitigate risks when they arise. So I think that this is a really good moment now to turn it over to Diego and kick off this conversation. Before I do that, just a quick note. If you have questions, do drop them into the question and answer box as soon as they come up, and I'll try to work them naturally into the conversation as and when it makes sense. So, Diego, over to you now. When you think about the globe, where the GCC sovereign wealth funds fit in the global investment landscape, what were the biggest changes that you and your team observed in investment behavior by these funds over the last year?
Yeah, thank you, Robert, and the whole Institute team for having me. I've been a keen follower of your work as well, and I'm very glad to be here. I think so. The GCC has always been important within the sovereign wealth fund community. I think that's nothing new, really. But if you look at not only the past year, but I would say the past 4 years, really, we've seen the activity of these funds really booming, especially when compared to other sovereign wealth funds and public pension funds that have behaved more cautiously, I would say, given the market uncertainty. And the reason is that, one of the reasons is that obviously oil prices have stayed pretty high since the end of the pandemic. I think last year the average price was $80. A year before that was $82, and that's well above the break-even prices for the fiscal accounts of these countries. So the reality is that these funds are receiving a lot of capital, and they had to put it to work very quickly. So that means that in the grand scheme of things, we've seen a lot of activity coming from the Gulf in the past 4 years. You mentioned the $82 billion deployed by the oil five, as we call the 5 most active sovereign wealth funds in the Gulf. That figure was 28 billion 5 years ago. So it has really, quadrupled in the past 4 years. And so if we compare it to like the Singaporean sovereign wealth funds or the Norwegian sovereign funds or the Canadian public pension funds, they are also deploying more capital, but not at the pace that the Gulf sovereign wealth funds are doing. So that's one aspect. And then the other aspect is I would say the emergence of a number of different players within the Gulf, right? So you talked about ADIA, Mubadala, ADQ, and then PIF. But the reality is that we also are seeing subsidiaries of those funds being created. So if we talk about Mubadala has now a third-party vehicle called Mubadala Capital. 75% of that capital actually comes from overseas investors, and they have become really active in the marketplace. Lunate is another asset manager that has arisen from in Abu Dhabi, and is chaired by ADQ. So, and then another set of players is what we call the royal private offices, right? So these are family conglomerates associated to royal private members, royal family members, where I would say the limits are quite blurry, right? So if you take the Royal Group in Abu Dhabi, that is a huge conglomerate chaired by Sheikh Tahnoon. And if you try to see how different they are from an ADQ, it's very difficult to see the limit. So in summary, you have all this number of new players arising and being more active that makes the GCC really the hotspot when it comes to deal activity globally. So as you said, I mean, we could be discussing about this topic for hours because it's really unparalleled what we're seeing in the Gulf these days.
Yeah, and I mean, just to pick up on some of the changes you mentioned, you discussed Mubadala quite a bit in your opening remarks, and I think one of the big changes that I observed in your coverage of 2024 versus 2023 was we saw Mubadala playing kind of deploying a much larger amount of capital, larger investments than it did the year before, and actually displaced the PIF, which had taken the lead in 2023 with, I think, somewhere over I want to say somewhere over $30 billion across maybe close to 50 deals, which was made a lot of news in at the end of 2023 and early 2024. So I guess just taking that change, in terms of assets under management, the Mubadala is a significantly smaller fund than the PIF, but actually, deployed considerably more capital last year. This is just one change that I would note. There are others too that you and your team picked up on. But when you look at some of those changes, what do they signal for you for the year ahead? I mean, and you've been looking at sovereign wealth funds for a long time. I mean, what are some of the changes that you expect to see year on year that don't necessarily indicate a long-term trend or kind of a critical juncture for a particular fund or for the sector more broadly? It'd be useful, I think, for our audience to kind of understand how you're thinking about year-on-year changes and what are really the indicators that we should look at to determine what are the big trends and what are just kind of normal fluctuations and variations within the industry.
Yeah, absolutely. That's a great question. And I think one of the challenges that we face in the industry is that every sovereign wealth fund is different, right? So we always say that if you know one sovereign wealth fund, you know one sovereign wealth fund. So it's very difficult to extrapolate and compare them all. So people normally talk about the comparison between PIF and Mubadala. The reality is that PIF, as you said, is much larger, but it's also much more focused in the domestic economy, right? So around 80% of PIF's portfolio is in the kingdom. If you compare it to Mubadala is 330 billion at the moment. Only 25% is invested in the UAE. So actually, the international portfolio of both organizations is quite similar. It's about $200 billion. And they have both been very active overseas. It's just that the PIF in the scale of things is much more focused domestically. So obviously, PIF has been deploying capital very quickly into the Giga-projects. You mentioned before the financing. They have becoming quite active in terms of raising new bonds. So I think that's one of the key changes that we're going to see, or we are seeing in the Gulf, is that sovereign wealth funds are becoming focused or concerned about the sustainability of the capital base in the long term. Right? When I say sustainability, it's not about the environment, it's about the resilience of the capital to long-term shocks. So they are becoming quite focused on attracting foreign capital and making that capital base sustainable over the long term. So again, PIF raising capital, nothing really worry in terms of gearing ratio so far, but more and more active. Mubadala has been raising bonds for many, many years now. But I think if you look at the free zones authorities across those countries, so if you look at King Abdullah Financial District in Riyadh, ADGM in Abu Dhabi, DIFC obviously in Dubai, you can see an array of financial service firms opening offices on the ground and basically deploying capital and setting partnerships for the sovereign wealth funds to co-invest. So that's a huge change. I mean, if you go back 15, 20 years, the only thing we talked about sovereign wealth funds was deploying capital overseas, right? So that was the beginning of the industry. But today, the industry is much more complex and much more, I would say, it's a two-way relationship. So it's not only sovereign wealth funds deploying capital overseas, but also managers coming to the region and creating that sort of sustainable environment that can ensure that that capital is sustainable in the long term. So a huge change in terms of the characteristics of the industry that we are already seeing, but we expect that the industry may look very different in 5 years or 10 years time.
I mean, speaking of some of the changes in terms of kind of investment, the industries that sovereign wealth funds are actually deploying capital in, whether it's within their domestic economies or in emerging and developed markets, maybe I'd like to turn our attention to kind of digitalization or again, the tech sector. This was a theme that your outfit, I think, designated as the theme of the year. And we are seeing, I mean, I take your point that one sovereign wealth fund, one sovereign wealth fund. But if we talk about investments in technology, we are seeing a number of Gulf sovereign wealth funds making some pretty large bets, not just investing in multinational technology firms that we all know and that these sovereign wealth funds have been investing in for a long time, but actually making large multi-billion-dollar bets on domestic technology firms or other initiatives with a strong technology focus, whether it's kind of AI, digital infrastructure, data centers, even space, as you point out in your research note. So what do you make of kind of this thematic focus to investments? I will preface that question with the fact that, or with the idea that, or the claim at least, that these are actually relatively new investments. I think if we were to go back a few years ago, nobody was speaking about significant Gulf sovereign wealth fund investments in AI in their domestic economy. So this has happened kind of relatively recently. I'm curious to get your thoughts about what the calculations are, the investment calculations are, and how you see these investments panning out over the next couple of years.
Yeah, absolutely. And it's a very interesting topic because, a few years ago, what we did was to analyze the change in industrial preferences of sovereign wealth funds. And that has become quite challenging because actually technology is touching in every single industry, right? So when we analyze the changes in industries, sometimes it becomes quite difficult to sort of pinpoint specific deals into specific sectors. So let's say data centers. I mean, what is it? Is it a real estate? Is it an infrastructure? Is it a technology asset? So it becomes quite blurry. So what we noticed again this year, as you said, is a boom in digital infrastructure. I mean, everything related to digitalization, the digital economy. And I think that's also sort of related with the ESG aspect of it. So it's becoming more sustainable. So if you look at data centers have increased from 2.7 to 10.3 billion in the past year. Very significant change. You have sovereign funds, not only from the Gulf, but from all the regions investing in data centers. But also digital infrastructure. I mean, you mentioned digital infrastructure. What we call digital infrastructure is basically telecom towers, fiber, all sort of the infrastructure that is going to allow us to transition into that digital economy. But then two increasing topics that we spot this year, as you said, were AI and space investing. So on AI, it's very interesting. Some of the funds have already been setting up specific companies to invest in AI. So in the UAE, you have NGX, which is actually a joint venture between Mubadala and the Royal Group or G42, to invest in AI. So they have actually been transferred over 50 employees from Mubadala, and they are totally focused on AI investment. They have already invested in Databricks, which is a huge company in Palo Alto. They have invested in OpenAI. They have invested in xAI, which is Elon Musk company. So they have become quite active. QA in Qatar has also been investing quite actively in the space, and PIF as well. So, you have all these major sovereign wealth funds from the Middle East trying to deploy. I mean, obviously, the ticket sizes are still small when you compare them to digital infrastructure or to data rooms, just because of the nature of the startup industry. But I think they will become more and more meaningful. And then the other aspect is space investing. I mean, if you look at both Saudi and the UAE, the countries themselves have very ambitious space programs. In the past 2 or 4 years, I think both the UAE and Saudi have put 2 astronauts into space. And I think that flows into the sovereign wealth funds, right? So I would say that the limit between the sovereign and the fund in the Gulf becomes quite blurry as well. So if you see those space programs, they are flowing into PIF and Mubadala, And those two companies are investing into space related companies today. So that's also an increasing theme that we're seeing. I mean, it was $1 billion last year. Again, not that significant in the grand scheme of things, but I think it's going to become more and more significant in the next 3 to 5 years.
Great. Let me work in actually a question that came in early because it's related to our conversation about digitalization and the technology-focused investments. We had a question about critical minerals. I think if we're thinking about the kind of supply chains associated with a number of technology-focused industries, critical minerals is obviously quite important. The question is about the Saudi PIF, but I think we could think about it more broadly from Gulf sovereign wealth funds making large investments in the mining of critical minerals in their own countries. Will this also extend to mining outside of their countries? And I think, at least from my impression, that there is a lot of interest in investments of kind of exploiting domestic resources in critical minerals, but also investments in a number of other countries as well, especially in Africa. I'm seeing evidence of that, but maybe you might want a thing or two about the role of the critical mineral space in the portfolios of sovereign wealth funds.
Yeah, I mean, absolutely. Mining has always been a key component of the sovereign wealth funds portfolio. I think because obviously it provides diversification away from oil. So not many sovereigns would invest in oil, but they're interested in investing in other commodities. But also it aligns well with the horizon, right? So sovereign wealth funds always look at it on a 10, 20, 30-year horizon. And I think mining provides that sort of stable cash flows that align well with their objectives of sovereigns. Obviously, you mentioned PIF. I mean, PIF has set up this company called Ma'aden, basically investing in mining overseas. But you have many different examples. I mean, in Mubadala as well, they have the Emirates Global Aluminium, which is a joint venture with ICD in Dubai, and they have invested in many mining companies in Africa. I mean, normally you would see investments happening in Africa, China, Australia. It's really all over the world. But they're still, I mean, it's not that they are too significant or meaningful in when you compare them with other industries. But I think the aspect that they provide is that diversification for the country that is really key. I mean, I'm normally asked if I think that sovereign wealth funds are political animals. I think, on the contrary, they are financial and economic animals, in the sense that sometimes if the country likes certain mineral or certain agro product, the sovereign wealth fund would be interested in investing more of that, but not because of political reasons. I think it's more economic reasons. So most of these funds that we've been talking about, they are tasked with the mandate of the economic development of the country. So I think, being able to invest in mining, in certain commodities that they could not find domestically, I think becomes really key. I mean, we are keeping a close eye on Africa. I think a lot of these countries are very rich in minerals, but the problem is obviously governance. I mean, if you look at DRC, for instance, they have the largest reserves of cobalt in the world. And we are always wondering why they don't have a sovereign wealth fund. But the reality is that the governance makes it quite difficult to manage the resources on the ground. So I think similarly, when a Gulf sovereign wealth fund is investing in Africa, that's something that they look very closely at. So we will probably see stable activity in this space, but I don't think it will be too significant when compared with other industries.
How about some other industries or big ticket areas of investment that we're seeing Gulf sovereign wealth funds, being involved in? Maybe just for example, the PIF. I mean, big, expensive investments in global sports sector. Also, experimental development initiatives like NEOM. I mean, how are these other industries that we're seeing, emerging as relatively significant parts of these sovereign wealth fund portfolios, at least getting a lot of visibility anyway, and in some cases being relatively expensive undertakings. How are these, what are the implications of those investments to your mind?
Yeah, it's very interesting because we all love sports, right? So sports are always in the front line because we all, it sells a lot of newspapers and people get hooked into those kind of stories. So again, sovereign wealth funds have been investing in sports for a long time. It's not, the biggest pool of interest in their palates, in the appetite, but still is quite noisy, I would say. So, and it's interesting because PIF has now been through a journey where I would say Qatar went through a few years ago, right? So if you remember, Qatar a few years ago set up this company called Qatar Sports Investment, and they started investing in PSG in France, and they went through this sort of, I would say, marketing phase where they wanted the world to know Qatar, right? So, and part of it was also linked to the Qatar 2022 World Cup. I would say that now PIF and Saudi in general is going through the same phase, not only because they are going to hold also or they're going to host the 2034 World Cup, but also they are through that journey of getting people to know PIF better. So obviously they have invested in from golf to MMA to football to e-games. So I think they are becoming more diversified within sports. But I think it's also a phase of, as I said, getting awareness of what PIF is doing. That's very interesting because, so if you look at Qatar, they use this entity called QSI, which is actually separate from QIA. People don't realize that it's not related to the sovereign wealth fund, but it's sort of a family office that does the investments of football. In the UK, you had Manchester City also being bought up by this private office of Sheikh Mansour, also separate from Mubadala. But in the case of PIF, they chose on purpose to invest in Newcastle in their own name, which was really unique. But I think it was motivated by that, that intention of people getting to know PIF better. And I think the Giga-projects are also part of it, right? So you mentioned NEOM. NEOM is a huge marketing play where they're actually gonna, if you look at NEOM from an investing perspective, you think, well, these are billions and billions of money deployed into a single project that we don't really know is gonna pay off in the long term. But I think the general sense is that marketing-wise and tourism-wise, is going to pay off in the sense of attracting interest and people into the kingdom. So it's very interesting how sports and Giga projects also align in that sense. So yeah, I mean, very interesting topic that has people, hook into the newspapers every day.
Definitely. Let's shift gears slightly here and give some coverage to some of the different sovereign wealth funds. We spent a lot of time talking about Saudi funds and Emirati funds. We'll revisit these funds for sure throughout the conversation. But I want to maybe touch briefly on the role of sub vehicles that we're seeing emerging from sovereign wealth funds, and it's a good opportunity to bring in the Oman Investment Authority. We saw the kind of launch of the Future Fund Oman. There are, of course, other funds of funds that have emerged as well from Gulf sovereign wealth funds that we could talk about too. But I'd be curious to get your view on do you expect to see more of these sub vehicles emerging? An expansion of the existing sub vehicles. And what are the roles, we say, just to take the Future Fund Oman as an example, and maybe others that you might want to talk about, what is the critical role that they're playing within this broader sovereign wealth fund ecosystem in the region?
Yeah, absolutely. And I think, it's easy to focus on Saudi and UAE just because of the scale of it. But obviously, every GCC country plays a different role. Oman is a great example. It's only been 4 or 5 years since Sultan Qaboos passed away. And I think that the new leadership has done a tremendous work in enhancing the fiscal and financials of the country. I think they just got upgraded to investment grade as a country. So that's also very positive. And I think the Oman Investment Authority has had a huge role in panning that out. Obviously, they emerged as a merger of the Oman Investment Fund and the State General Reserve Fund a few years ago. They now have around $50 billion US, including the OQ, which is the national oil company in the country. And they have now set up this third sub-vehicle, as you said, called Future Fund Oman, which basically is going to look for that capital to be sustainable. So they're going to deploy capital, domestically, but they're going to also set up partnerships with other sovereign wealth funds, which is something that they have done historically as well. I mean, if you look at their partnerships abroad, they have a partnership in Spain with Cofidis. They have a partnership in Vietnam with SCIC. They have a partnership in Qatar with Al Hos. So it's a number of partnerships overseas. So I think Future Fund Oman is just trying to get that more structure and more resources into it. So that's great. And that's also what is happening in other countries. So if you look at Kuwait, for instance, Kuwait announced last year a new development fund also called Siyada Development Fund, which is theoretically going to be part of the KIA as well. KIA is the structure into two different pools of capital, the GRF, so the General Reserve Fund, and the Future Generation Fund. And a few years ago, they realized that their fiscal rule actually had to change in order to not to basically deplete the GRF. So that means that they're also going to become this umbrella fund with different categories where Siyad is going to play that development role. And this is also very interesting because when we compare funds across the GCC, we see two different kind of approaches. One is what we call the Abu Dhabi approach, which is basically having different funds for different mandates, all reporting to different chairmen normally. And they have therefore very different sort of mandate and risk appetite and asset allocation. So in Abu Dhabi, it's very clear to see the differences between ADIA, that all invest overseas, and ADQ, which is a huge umbrella of national champions. If you move to Saudi, this is what we call the Saudi approach. It's one single umbrella managing all these different mandates. So most countries, I would say, in the Middle East or in the GCC follow the Saudi approach. So in Oman, you have the Oman Investment Authority. In Kuwait, you have the Kuwait Investment Authority. And then in Bahrain, it's more like the Abu Dhabi approach, where you have Mumtalakat playing the development role and FGR playing the savings mechanism. So very different dynamics across the Gulf, but a lot of them, I think, are aligning to what you say, Robert, which is these development funds being created to make that capital sustainable in the long term.
I'm going to ask you to maybe elaborate on the Kuwait country case study and the KIA, just because my colleague Kristen has nudged me to ask about Kuwait, which is an important player in the sovereign wealth fund space, but also one that I think in many cases is overshadowed by what's going on in the other countries, even by smaller funds, significantly smaller funds, and what they're doing. How would you, I guess if we were to look at the KIA itself, how would you classify its investment activity over the past year, and what do you expect in the coming year? And I know you mentioned Siyada, the kind of domestically oriented entity that we've heard news about. I guess could you maybe add a little the likelihood and the timeline that you see that emerging? Because like you have been following the reports, but that this is coming, but haven't seen a lot of evidence that actually of it materializing and investments being deployed locally, as we are seeing them in some of the other countries, Saudi Arabia and the UAE, to name just a couple of examples.
Yeah, it's interesting because whenever we talk about Kuwait, we go back to the very nature of sovereign wealth funds and whether they work better in democratic societies or in autocratic societies. And it's quite interesting to see how sovereign wealth funds pan out in some of the democratic societies. I mean, if you look at Norway, for instance, They have been trying to invest in private equity for years now, but they cannot because they are so transparent and so accountable and so democratic that rule has to pass by the parliament, and the parliament has over and over again turned down that proposal. So if you translate that into the Gulf, the most democratic country in the Gulf is Kuwait, and it has actually played against the management of the sovereign wealth funds over time. As you know, I mean, they had this revolving door of leaders and not only emirs but prime ministers and sort of minister of finances, you know, lasting for 2 years, and that has created an environment where actually the two main pools of capital of the country, which are KIA and PIFs, which is the Social Security Fund, have lacked that stable leadership and that sort of vision that other GCC countries have. So I think, I mean, 2 years ago, the leadership of PIFs were dismissed overnight. And until now, they only have acting directors, and they haven't had an investment committee in 2 years. I mean, it's very difficult if you are the manager, if you are the, the KIA, if you are the PIFs, and you are subject to these changes in leadership and this sort of lack of governance. It's very difficult to excel at what you do, right? So we are sometimes challenged by this, oil five definition where we leave out the KIA, and it's just because KIA has historically been a fund investor only because of the challenges that they face internally. So I'm not saying that the lack of parliament now is going to be a good thing, in concept, but I think at least it's going to provide like a stable leadership, and hopefully we will provide a stable leadership where KIA and PIFs can operate into. So a few months ago, we saw the CEO of KIA being replaced. He was about to retire, and he was replaced by a member of the royal family, very young royal family member, 35-year-old. But hopefully, is going to provide that stable leadership in the long term. And most of the acting directors will become permanent directors, and they will again excel investing not only in funds, but also in direct investments overseas. So KIA is obviously a very important sovereign wealth fund. It's just that they haven't had as much activity as they would have had if that leadership was stable in the long term.
Mm-hmm. While we're still on the subject of new and different funds, we have another question about the Dubai Investment Fund. What are you seeing and hearing about this fund?
So Dubai is very interesting. I mean, Dubai follows what we call, again, the Abu Dhabi approach, which is having different funds for different purposes. The prime sovereign wealth fund is the ICD, Investment Corporation of Dubai, which is the holder of Emirates, many other national champions within Dubai. But then you have the Dubai Holding, which historically, it was a real estate manager for Sheikh Mohammed bin Rashid. Now it sort of changed the law to become more of a sovereign wealth fund, active not only in real estate, but also in other asset classes. So I think Dubai Holding is going to become quite more active as well. But then, as you said, we had the Dubai Investment Fund being created on January 1st of 2024. And basically, as a replacement of the Dubai Wall, right? So DP Wall was always within the Dubai Wall umbrella, which was the sovereign wealth fund. But in reality, Dubai Wall and DP Wall were very similar because everything was put under DP Wall. So it became basically the limits between the Dubai Wall and DP Wall were very narrow. What Dubai did was to create this new umbrella called Dubai Investment Fund, and basically dependent of the Department of Finance, which is the Ministry of Finance at Dubai level. And they started putting certain assets that were owned by the Department of Finance, such as Salik, which is the toll road in Dubai, Dubai Taxi, which is the taxi company in Dubai. And they were all put under DIF. And what DIF did was to take them public. So basically create another cash flow stream where they would list some of these assets. Some of them would be invested by domestic companies like the Emirates Investment Authority, which is the federal fund. But some of the funds actually came from overseas. So GIC from Singapore was one of the funds that invested in these companies. And that sort of created a new revenue stream for the government of Dubai. So now you have the ICD, you have Dubai Holding, and you have this DIF, which basically is an $80 billion fund, of which around 50 billion is actually DP World, but the rest are domestic entities that were not part of ICD in the past.
Great, thanks for that. I'm going to move the conversation a little bit into more of a thematic focus here, away from individual funds and individual countries. We have a question about Gulf Sovereign Wealth Fund initiatives or efforts to support decarbonization and sustainability, and where those initiatives stand. I think we saw a lot of announcements and initiatives emerge over the past few years. Definitely in the lead up to COP28. I think many of those have started to, have not been as visible, or maybe have kind of been scaled back. We've seen other asset managers outside of kind of sovereign wealth funds also kind of, I would say, reneging. I'm lacking the accurate word here, but kind of scaling down or pulling out of commitments that they made in the past that were directly related to climate, environment, and other sustainability issues. So to your mind, where do the Gulf Sovereign Wealth Funds stand in some of those initiatives that were put out there a few years ago? And where are these trends likely to go over the coming years, especially under a Trump administration where a lot of us expect there to be even less momentum in that domain, or at least for the next 4 years?
Yeah, that's exactly right. I think we've lost momentum not only in the US, but I think globally and in the sovereign wealth funds around sustainability. I think part of it was related to the hype of COP28 that was held in Dubai, as you know. And there were a lot of announcements related to that event. And I think in the past year, it has been more of low profile. We have still seen a lot of commitments into new funds. And the reality is that, again, because of the limits between the sovereigns and the funds in these countries are quite blurry. If the country commits to net zero, that means that the sovereign wealth funds have to work through that net zero goals. So every time that a manager raises a multi-billion-dollar fund, Brookfield, or Acquire, or a TPG, we are seeing sovereigns not only from the GCC but from everywhere flowing in and committing billions of dollars of capital into it. And I think they have to. But also we're seeing a lot of activity in oil and gas. I mean, we saw Lunate, which again is related to the sovereign wealth fund ADQ in Abu Dhabi, buying back part of the pipelines of ADNOC, back from GIC and KKR, I believe it was. So I think sovereign wealth funds are mature enough as to identify opportunities, whether they are related to green assets or to black assets. And that's the reality. But we're going to keep seeing sustainable deployments and commitments every time a fund raises them, because they have to. And going back to Lunate, they now have a subsidiary called Altera, which was a $30 billion fund created out of COP28. We are seeing that subsidiary or sub-vehicle, as you called them before, committing more and more capital into sustainability. But again, that will not prevent them from investing in oil and gas if they believe that there's a right opportunity as well.
Mm-hmm. On the on the imminent political changes that we're about to witness here in the U.S., and given that it came up in the last question concerning some of the considerations that will be underpinning the kind of calculations of Gulf Sovereign Wealth Fund investments in sustainability, climate, environment, we have another question that's related here. It is, how might the strategy of Gulf Sovereign Wealth Funds, many of which have already have large allocations, in the U.S., adapt to some of the challenges, both the challenges and the opportunities of the incoming Trump administration and the changes that this new administration are likely to usher in?
Yeah, I think, sovereign wealth funds, economies in the Gulf have always managed to stay neutral, basically, between the West and the East, right? And that is something I think common with the Southeast Asian sovereign wealth funds. So they know that they can benefit from both economies and they don't have necessarily to choose. However, and it's not only the Trump administration, but I think the US has tried to put some pressure into them choosing. And a good example was what happened with the G42 in Abu Dhabi, where they had a significant portfolio through an entity called 42X Fund, and basically had a significant portfolio in Chinese AI. And basically, they had to remove the entity and, well, transfer it to Lunate, basically, but just to claim that that entity was sort of China free or free from influence from China companies. And in the week later, Microsoft landed in Abu Dhabi and signed a $1.5 billion deal with G42. So that was really clear. What the dynamics of it were really clear. It was pretty unique. But I think in general, what the US has been focused on is China rather than the Middle East. I mean, if you look at CFIUS, most of the deals historically of what they have reviewed and blocked were deals coming from China. They haven't necessarily been, too concerned about Arab money coming into the US. I mean, not only because they are less significant in the grand scheme of things. I mean, we're talking about economies that are much smaller than the Chinese economy. So I think the Trump administration may put some more pressure into it, but the reality is that I don't think the Arab capital is going to become too scrutinized when it comes to CFIUS. I think CFIUS focus will remain in China rather than from Middle East.
Beyond the political changes here in the U.S., what are some of the other, the top geopolitical or geoeconomic risks that you're hearing from Gulf Sovereign Wealth Fund officials and those in their orbit that are of primary concern to these actors when they're thinking about the year ahead and those kind of risks that potentially could emerge, existing risks or those with the potential to emerge that could impact assets or the types of deals that can actually be that can be seized?
Yeah, I mean, it's interesting because we did sort of an analysis on the sensitivities and resilience of portfolios according to the country of origin. And the reality is that the conflicts in the Middle East, in Palestine, and also in Russia, they haven't affected the sovereign wealth fund community too much because their portfolios in those countries were really limited. I mean, in Russia, I think the sort of the exposure to Russian assets were less than 1%. So overall, China is a different animal, right? So most of these companies or funds have significant exposure to China. So sort of an unraveling of the situation in Taiwan or the endangering of the relationships or the further decoupling between the US and China could really affect the sovereign wealth funds in the Middle East. And they know that. So, but again, I think there are ways to circumnavigate that. Going back to the example of 42X Fund, is not that they divested, actually, like the press reported. It's actually that they move entities. So they basically took one sub-vehicle and move it to another sovereign wealth fund, which is something that they could do. So again, I think the exposure to China is a different level for sure, but I don't see that affecting too much just because they have resources and they have ways of circumnavigating that scrutiny.
You mentioned that Gulf sovereign wealth funds have relatively limited exposure in their portfolios for at least for countries that are right in the middle, I mean, conflict zones, so to speak. But we do see for certain funds a kind of higher exposure to other regional economies. I mean, Egypt comes to mind, and this gets to a question that was asked as well about ADQ's investment in Egypt. The question that came through is about how you view those investments and whether you can see them as genuinely economic in nature, or if you think there may be also political calculations underlying those investments. And I just am, be curious to get your thoughts on that, and also the kind of broader calculations behind ADQ's investments in Egypt, given that we know the economy has been suffering from tensions and conflict in the Red Sea, and there are ongoing concerns about a potential spillover of conflicts in Gaza and other parts of the region as well. So over to you on ADQ in Egypt.
Yeah, absolutely. And it's very interesting because, I mentioned before that we believe that normally the motivations are financial and economic rather than political. But actually, in the Middle East, sometimes you have what we call the soft power, right? So which are basically cash-rich economies such as Saudi, Qatar, the UAE, committing capital, G2G, in countries like Egypt, Turkey, and to a certain extent, Iraq and other countries in the region, Jordan. To basically, create some sort of environment where they have, the upper hand, and they at least have some influence in their recipient economies. So in Egypt in particular, historically, we've seen a lot of MOUs being signed between the governments of the Gulf and Egypt. Most of them have not materialized, to be honest. And we have kept a close eye into it. Because one thing is, some Saudi delegate flying into Cairo and signing a $16 billion deal, which happened 15 years ago. Another thing is actually finding the opportunities and deploying that capital. So we've kept a close eye into these sort of MOUs between sovereign wealth funds and recipient economies. And the reality is that most of them do not pan out, do not materialize. Now, what ADQ did with Egypt is to actually go a further level and actually open an office there a few years ago. I think besides all the national champions that they inherited from the Abu Dhabi books, one of the main or first investments that they did overseas was actually in Egypt, was Amun Pharma, which was a pharmaceutical company in Egypt. And they opened a small rep office in Cairo to look after that. So now what they did with Ras Al Khaimah, I want to say, I'm probably saying it wrong, but with that project in the Red Sea, is to say, okay, we will commit to the development of this project, $35 billion. But actually the ability to deploy that capital in the long term will depend on the actual opportunities to invest in, right? So again, those figures, we haven't even reflected them in the activity in the report just because they haven't been deployed yet. But I think at least it's a good start by saying, hey, we're going to do a Giga project, but it's actually going to be outside of the UAE. It's actually going to be in Egypt. And this is the amount that we may deploy in the future. But it hasn't been deployed yet, so we don't sort of count it as an investment activity yet.
We've talked about the sovereign wealth fund investments domestically, regionally, in other emerging markets, and also, we didn't discuss it, but it's obvious that they have kind of existing and longstanding investments in developed economies as well. Given your research over the past year, that you and your team collected and put forward in your most recent report, how are some of the top GCC sovereign wealth funds managing their regional preferences for investments? And are there any big shifts that you're seeing in terms of where those investments are falling in a geographic sense? You said a little bit about China and kind of investments in China and weighing the kind of opportunities and risks there. I might just prod you as well, if you can say something about Central Asia, because there was a question about opportunities for Gulf investments in Central Asia and in renewable energy projects. And I know that there is a lot of activity and conversation in that space. I actually attended a roundtable in Istanbul back in November on GCC. Central Asian ties and sovereign wealth funds came up quite a bit. So a bit about the kind of calculations underlying the geographic and preferences of where investments are materializing.
Sure, yeah, absolutely. I think, and again, that goes back to the question of that every sovereign wealth fund is different. So some of the funds in the Gulf have been very active in developed markets. So ADIA, we've seen them very active in developed markets. Most of the opportunities are still in the US and Europe. However, in general, I would say that we saw a lot of interest in three emerging markets in particular: China, India, and Indonesia. And that stays constant from previous years. And I think those three economies are really going to push the envelope when it comes to emerging markets. In Indonesia and India in particular have set up their own sovereign wealth fund that is in charge of catalyzing capital into their economies. So Indonesia, INA, the Investment Authority, has managed to attract capital from ADIA and then APG in the Netherlands and CDPQ in Canada to basically develop projects domestically. But so if we look at China, actually in the past 12 months, we saw 10.5 billion deployed in China, which was the historical maximum of sovereigns, and most of it came from the Gulf. Sorry, the second part of the question was.
Yeah, I think it's interesting to get that view of some of those top destinations that you're seeing pop up in these portfolios: China, India, and in Indonesia. I guess, I mean, you could pick. I know there are a lot of different funds to pick from, but I'd be curious to get your view for specific Gulf funds, seeing that hierarchy of that prioritization of investments fall, and any big shifts that you're seeing. And I mean, I've heard for a long time, and I've been tracking in various research initiatives about, interest from Gulf sovereign wealth fund officials to increase, the share of their portfolio that's, their exposure to Asian markets. And we're seeing a little of that in certain markets, but not the type of movement that would meet the targets that we're hearing from some of these officials. So I guess, what are the big changes in some of those markets when we're seeing, investments in emerging markets? Anything kind of significance to note and to keep an eye on over the coming year?
Yeah, sorry, I just remember Central Asia. You were asking about Central Asia. So
Central Asia too.
Yeah. So using Central Asia as an example, I think that one of the key challenges when investing in emerging markets is the sort of the tax and legal regulatory environments, right? So whenever a sovereign wealth fund from the Gulf spends time, efforts, and resources into looking into a new emerging market destination, it has to be with the right team, right co-investors, and right sort of T's and C's, terms of conditions, to make that capital safe in that environment. So using Central Asia as an example, I mean, the funds in Kazakhstan, Azerbaijan, they have been very active as an overseas investor, but also an attracting sovereign wealth funds from the Gulf. I mean, an example is ADQ co-investing with Zamruk Azina in Kazakhstan, $6 billion into sustainable energy a few years ago. However, there have been also pitfalls and sort of bad case studies. Like last year, the Armenian investment fund went actually bankrupt and was closed down because of allegations of corruption. And they had actually co-invested with some of the UAE funds, like Masdar was a co-investor in sustainable energy in Armenia. They actually had a joint venture with Air Arabia from Sharjah into the local airline in Armenia that was then shut down. So, I think that's a good example of lack of governance or accountability, where the money of sovereign wealth funds may not be completely safe. So again, they are very careful when investing in emerging markets. I think that's common not only to Central Asia, but in general, just because of the tax and regulatory regimes that may pose a significant challenge.
Yeah, I might just add on a point there too. You mentioned the Oman Investment Authority's kind of joint ventures that they have with a number of different countries or governments that we see. And one of the actual strategic joint ventures that the OIA has created is, I believe, with Uzbekistan. And I think that's one avenue for sovereign wealth funds to mitigate some of those risks and, ensure that they have local players who have skin in the game when they're setting up, when they're considering investment. So we see a lot of kind of joint ventures with, it could be ministries, other countries' sovereign wealth funds, banks, other key players within these countries, as a way to, is to really ensure that they're protecting their investments. We're coming up on we just have about a minute to go. So I'm going to kind of bring this chat more or less to a close, and I'll just turn it over to you for any last remarks. Before I do that, there was kind of one question about The source of the numbers being quoted, I can at least say, I can't give a source for every quote. In my opening remarks, I actually relied on a number of sources, a number of figures that Diego and his team put together in their annual report. I suspect many of the sources you're pulling on, Diego, are coming from you and your research team as well. But I also used a number of other sources from various research projects. I think that's part of the name of the game of this topic. Everyone is kind of doing their best to pull together the data and figure out the numbers. I think there's inevitably going to be some variation depending on how you're calculating those numbers. But I think we did a good job getting through most of the questions. I apologize for one or two that inevitably didn't make it into the fray. And I'll just turn it over to you, Diego, for any last words.
Yeah, no, this is been fascinating discussion. As we said, we could spend hours talking about the GCC countries and funds. And I think they are here to stay. I think we're going to see just increasing activity in the next few years. I'm excited only in the first 15 days of the year, we have already seen investments from Aldia, QIA, PIF, Mubadala. So we're very excited to keep covering this space. And I'm sure that if we have this same conversation a year from now, it's just going to become bigger and bigger.
Great. Well,
so thank you again.
We're going to try to bring you back to have a conversation before a year passes. But, in the interim, thank you very much for joining us. Thank you for everyone who tuned in and participated with questions. And yeah, thank you very much. Have a good rest of your day.